Hey everyone, how are you doing today? Welcome on another station, on another educational station by your mentor, OKT Genesis on Instagram and Social Sniper. Today we're gonna talk about Forex Basics, because not everybody coming to me for mentorship knows these basics, right? So at times I got DMs of people telling me like, "Oh, I'm new into these. There are things that you explain that I don't yet understand." It's normal because you're like a piece of A4 paper, a blank sheet of paper that you don't know anything yet. So it's normal for us to go through the basics with you so that you know what this is all about, right? But there are those who come for me to mentorship because they see my snipers entry, and it's not like they don't know the basics and they know the basics, and maybe this is gonna be useless for you because you already know what I'm trying to talk about. But for those who don't know anything yet, I think it's gonna be helpful for them, right? Yeah. So I'm gonna be brief and very quick with it, and without taking most of your time. So, what are peeps? Like, what are peeps? Right. I'm gonna go to the charts and I'll show you how to calculate peeps on here. We're on a 4 hour time frame, let's go to 15 minutes. Yeah, you see the setup here. I took this trade and it's already in profit. So you see I'm swinging in profit. So, but nevertheless, that's not what I wanted to show you in this. So peep, a peep is the movement made by a candlestick either upward or downward, right? So if you're anticipating a trade to go bullish, it means that, oh, I just remembered something. I'm gonna add here. Bullish and bearish. I forgot that. So if you're anticipating the market to go bullish, it means you're expecting this market to go up. Where you take your trade, the moment at which you enter your trade, you're going to take hit on this spot here. I don't know what trading platform you're using, so you're gonna hit on these, and you calculate the number of hit. Let's say this was your entry, and you were bullish on this trade that you were taking. So you calculate, you put it here. So here, see, right? Now the number that it shows you above will change like 46, 47, 50, 59, 64. That's your number of people you have made on this movement. 60 people. This is 60 people you've made, right? That's what they call peep, right? That's what they call peep, and that's how you count your peep, right? Let's go to the next question. So a peep is a movement made by a currency pair, either in a bullish movement or in a bearish movement. And I'm gonna come to the meaning of bullish or bearishness. I'm gonna explain that to you people. step-by-step explanation. And this video is gonna be very swift and short for people that don't know what bullishness is all about. Yeah. So now we're talking about stop losses, right? Stop loss. What's a stop loss? I'm gonna define this for you. Uh, a stop loss is something that you guys are gonna excuse me for a minute. I'll be back. Well, I'm sorry for the retaliation. I was checking for some little bit of things I could add up to this video, but it's rather unfortunate that I don't get to see the things I was looking at. So, what a stop loss? A stop loss is the amount of pips, exactly, is the amount of pip you're willing to lose if your trade reverses and doesn't goes into your favor. That is the amount of pip you're willing to lose. It's called a stop loss. And a stop loss is placed off of these numbers you see on the charts. Off of those numbers, that's how a stop loss is being placed, right? And so as a take profit is where you're willing to take your money when the trade goes into your favor. That's what it's called, take profit. You see, at times I was selling my trade with 3 take profits. It doesn't mean that if I send you a trade, it goes into profit, all of a sudden you can take your profit, even if it doesn't hit the take profit with which I sent to you people, right? You can take the profit you have, or we can cut it into half and let the rest continue and hit the take profit that I placed, right? 9 times out of 10, my take profit are not gonna hit. I'm not guaranteeing you all the time my take profit will hit, but if you go into profit and you see it's fair enough for you, you can take the profit and get out of the market. And as I say, the market is not certain. Nobody controls the market but a hedge fund. So I'm not a god. I'm not someone that was so perfect. I lose at times, but what I make sure is my profits always recompensate all my losses, right? So that's a take profit. Now, what a lot sizes, I like this one because this is the thing that makes most traders fail a lot. I think when I say a lot, I mean a lot. These make traders fail a lot because they follow greed instead of consistency, right? A, a lot size is the amount of money you are willing to make per pip. Let's say the amount of dollar you're willing to make per pip on a particular trade which you place. That is what they call a lot size. Now, there are 3 types of lot sizes. We have the micro lot size, we have the mini, and the standard lot size, right? Most people at times when they begin trading, they want to make quick money because these lot sizes are the things that are going to make you rich, very, very rich, and are the same tools that are going to blow your account and make you go broke. Now, you have to know how you're using these. If you don't know how you're using these, it's going to affect you either negatively or positively, right? And as you see how I arrange this, you see on the various type of lot size, you see the amount of dollar it gives you per pip, right? You see the amount of dollar it gives you per 20 pips, and you see the amount of dollar it gives you per 40 pips. You can pause this video and look at these things and see the amount on a micro lot size on a 0.01 lot size you have 0.10 cents dollar per pip, right? So on and so forth. Now, many people come onto the market with a getting rich mindset quick, right? Now, when they come, they want to use standard lot size all of a sudden, and they put a 1.00, which means it's $10 per pip because they want to get rich fast. And you see, as that maybe it makes it drops of 10 pips, that's already $100, right? You might hit your stop loss and you lose 100 already. So when they come here, they want to make money quick. You see, They put heavy lot sizes, and probably they don't have a good account that has good money in it. I'm not saying that you need to put good enough money to start trading. No, you can take even a $15 account to XXX amount, right? If you know what you're doing. Now, when you come here, you want to use a standard lot size without even knowing how to manage a mini and a micro lot size, is very dangerous for you as a trader and as a beginner. So I don't advise anybody to start like that. If you are a beginner, don't go more than a mini lot size. Start with a 0.10. It won't kill you, but you will still be making money. Start with that. That's what I advise most people to do, and that's how I started. Now we'll leave the part of it. Now, how to copy and paste. How to copy and paste. Now you see this box here, right? That's how I send my trades most of the times, right? You see this red area here, right? That's how I send my trade. Now, if you come to this red area, you see the bottom of this red area here. I'm gonna place this thing here, this line, right? You see the bottom of this red area here. That is what they call stop loss. So if I send a trade like this, you see it in my chart. You see this red line here. You just need to follow where this red bottom, this red area like this, the bottom of this red area. Just need to follow it at your right and see the number that it lies on, and you take that number and put it on your method for trader as a stop loss, right? And now at the top side, this will be your take profit. That's how I send my trade most of the times. There are people that might not know because they're into the chat and they don't know yet, but that's how I send my trades, right? So that's how you copy and paste. And now, bullishness. What's bullishness? Like what they say, the market is bullish, or they say the market is bearish. What does it mean? These are all, like what I'm telling you, these are all trading terms and trading words that you will listen to most of the people that are trading. So if they say a market is bullish, it means the traders are expecting this market means the traders are let's say we are here, right? We are at this position. Yeah. Oh. Let's say we are here. Let's say the market never did. Excuse me. Oh. Let's say we were here, this position right now, and the market had not yet done all those other things that it's doing. So if we say the market is bullish, what we want to see is we want to see this market move up from here. Like you see, it's going up, going up, going up, going up. Boom. That's what they call bullishness. So the movement of this market from here to here is, if you want to use it as a trading term, you say the market was bullish from this position to this position. And bearishness is the reverse of this, right? Bearishness is the reverse of this. And I think, oh, share the show. Here on USD, I want to see this market drop down and take all these lows before boom going up, you know what I'm saying? That's bullishness and that's bearishness. Yeah, I think we are done with the Forex basics on how to copy and paste trade, which is one of the basic things. And if you want to talk about broker is where even though it's not written there, broker is where you deposit your money to start up a live account. I'm not going to tell you my broker, but you're free to choose any broker you want. You can go online and say it's the best broker, or you can ask anyone, and if you want to know brokers that I use, you DM me, I'll tell you, but I'm not going to tell you here. So that's what the broker is. Now, what's a week? I'm going to tell you, I'm going to do some additional things in here, because these are terms you're going to hear me use most of the time when we'll get into our strategies, because this is just introduction. Now, once you see a candle like this, you see this candle, look at the body. This is the body of the candle, right? When you see a candle like this line is going up before the candle comes down and closes here. This is the wick. That area that I circle is a wick, and so is this. So these are what they call wicks. These are wicks here. These are what they call a wick, right? You see someone said a candlestick just wick at my stop loss. It means the candlestick wick, you make this thread and hit at the stop loss, and maybe you come back and close and continue downward. That's what you're listening most of the time, people saying it, right? Um, candlesticks. You see, candlestick. These are candlesticks, and a candle is formed regarding the time frame at which you are. If you're on a 1 minute time frame, it means each candle contains 1 minute. If you're on a 15-minute time frame, it means each candle is 15 minutes. If you're on a 1 hour, it means 1 hour contain it means one candle is 1 hour. So that, and so on and so forth. That's how it is. I don't know the basics. I'm going to say again. Yeah, so with that being said, thanks for watching and see you at the next class.